With that shift focus to personal finance and to the more abiding questions, joining us as the guest today is Hemant Rustagi of Wiseinvest Advisors. And Hemant, welcome. The question to you is about children. How really do you save for children's education? How do you set a target in terms of amount? At what point in time do you start saving? The whole gamut of how to save for children.
Well, I think saving for children or planning for children education is a part of the financial planning process, and the right way to start. In fact, let me just focus on the financial planning process itself to begin with. The right way to start the process of financial planning is to first establish your goals, assign a time horizon and establish a target for each one of them. This is very important because it allows an investor to decide the kind of asset allocation should be there. Now, for example, if a goal has to be achieved in the short term, the focus has to be on debt instrument, and if it is for a long term, then the focus has to be on equity. Many investors make the mistake of having one common goal of what we call the wealth creation and creating one portfolio, which obviously is not the right way, because it makes practically impossible for an investor to keep track of how the asset allocation has to be done, how much has to be put aside for each goal, and how much has to be spent on a particular goal. So I think first thing very important is that there has to be a separate portfolio for each of the goals which are a part of an investor's financial plan. I mean, as far as planning for the children education is concerned, I think it's a very, very important goal for any investor, any parent. And in fact, the right way is to start investing early, because it has many benefits when you start investing early. But unfortunately, not many parents follow this. Either they delay the process of planning for the children education, or do not invest sufficient money. Like I said earlier, there are many advantages of starting the process early. For example, if there is a long enough time horizon, one can look at asset class like equity, even though it is aggressive, but the fact remains that it has the potential to give the best return among all the asset classes. The second is, major advantage of investing early is that one can benefit from power of compounding, which means that even with a small sum of money, the parents can create a huge corpus. So the first thing is that they must begin the investment process as early as possible. But of course, in reality, it depends on at what stage they start. And based on that, certain model portfolios can be worked. Now, for example, if the parents start investing for the child education when the child is up to the age of 5, from the birth to 5, it gives enough time. The time horizon is on 13 to 18 years. Gives enough time to the parent to, invest in an aggressive asset class like equity. Equity, as we know, has a potential to provide real rate of return, and that actually goes a long way in creating the kind of corpus they will need for that. Of course, the key is to, invest in a disciplined manner. And also another important point is that once the child reaches the age of 16, they should start, putting this money into the debt so that they can protect all the gains that they have made. The other one is that if they start the process in between the age group of 6 to 12, then the time horizon is 6 to 12 years. There, it should be a balanced kind of portfolio, maybe around 50-60% in equity and 40% in debt. And then finally, if the age group is, let's say, around 13 to 18, the time horizon is, let's say, around 1 year to 5 years. There, the focus has to be more on capital protection, and maybe they can look at market-linked debt products of mutual funds. Now, there are, of course, many options available to the parent to plan for their children education. There are children plan of insurance companies. Then there are dedicated child fund from mutual funds. But to my mind, I believe that the best way is to take a combination of open-ended fund, because there are a variety of open-ended funds available. They have flexibility. They have the potential to give better return than these dedicated child plans, and also they are more tax efficient. So if investors can, or parents can, manage their portfolio actively, I believe is a combination of mutual fund is the right way to actually proceed for this important goal of their life. But like I said, the sooner they start, the better it is.
All right, Hemant, do stay on. We've got a few callers as well asking questions with respect to this. Now, let's turn our attention back to a personal finance segment. Zahra Akhtar calls us from New Delhi with her question. Hi, Zahra.
Yeah, hi. My question would be that I want to go for my master's, for which I wish to take an education loan of around 8,90,000. Now, all banks give 1% interest concession on full tenure of education loan, if interest is serviced during study period, which actually is the repayment holiday. Now, I'm not sure if I should use some part of my savings to get that interest concession, or should I use all of my savings amount to minimize the loan amount and rather pay the loan back with original interest rate?
Okay. Hemant?
Well, yes, it's absolutely true that, the 1% concession on the interest rate is given, provided the interest is paid during the moratorium period on a monthly basis and regularly. It's certainly a good idea to actually opt for this, but I think there are a few factors that you need to really consider here. One is because the loan is going to be around 8.9 lakhs, which means that you'll have to pay a margin money of around 5%. So you need to make sure that you have that money, because you said overall you have around 1.6 lakh, and then also considering that the interest rate currently would be around 12% or thereabout, you need to make sure that you have enough cash flow to pay the interest during this entire period of when you're studying. And also, I think you need to also keep aside some money as an emergency reserve. So if you believe that you can arrange for all this, and certainly you should then go for this concession rate. If not, and if you are confident about getting a decent job after you complete your master's, and if you feel that you can, service that debt subsequently, then maybe you can keep this money aside as an emergency. So it all depends on whether you can organize that much cash flow to take advantage of that or not.
All right, Zahra, I hope that solves your query. And Hemant, thanks so much for joining us. Need to slip into a very short break, but joining us